Did you know that you can buy a property without needing a mortgage at all? Bridging finance is one of the most misunderstood but most powerful tools available to property investors in the UK. And in this video, I'm going to explain exactly how it works, when to use it, and how to avoid the biggest mistakes investors make. Hi, I'm Dan, a buy-to-let and bridging loan specialist, and I help landlords and investors finance deals that traditional lenders would say no to. So let's start with the basics. What is bridging finance? Now, before we go any further, this video is all about non-regulated bridging finance. That means it's for investment and business purposes only, not for buying or refinancing the home that you live in. Regulated bridging is a different type of lending altogether and is covered by the FCA rules. So if you're looking at financing your main residence, this video won't apply to you. So in simple terms, a bridging loan is a short-term loan secured against a property, usually lasting between 6 and 18 months. It's designed to bridge the gap between buying a property and either selling it or refinancing it with a longer-term mortgage. Unlike a traditional mortgage, bridging finance isn't based on your income. It's based on the value of the asset and the exit strategy, which is how you're going to repay the loan. And that is what makes it incredibly flexible. For example, you might use bridging finance to buy a property that's unmortgageable. Maybe it doesn't have a working kitchen or bathroom, or it's in a too poor a condition for a standard lender. You can use the bridging loan to buy it fast, refurbish it, and then refinance it onto a buy-to-let mortgage once the work is done. Another popular use is auction purchases. With auction deals, you usually have to complete within 28 days, and no high street lender is moving that fast. But bridging lenders can complete in 7 to 10 days if needed, so it gives you a fighting chance. Now let's be real, this isn't cheap finance. Bridging loans come with high interest rates. Often there are arrangement fees, valuation fees, and legal costs too. So they're not designed to be held long term. You need a clear exit route in place before you go near one. That exit might be refinancing onto a buy-to-let mortgage after a refurb, or it might be selling the property and repaying the loan from the sale proceeds. Either way, lenders want to see that you've thought this through from day one, and here's where most people go wrong. They see the speed and flexibility and forget that bridging finance is only as good as the plan to get out of it. So no exit, no deal. But what if you get it right? Bridging finance can help you move fast on opportunities, take on projects others can't touch, and seriously scale your portfolio. If you're an investor, developer, or landlord looking to grow aggressively in 2025, bridging finance could be the key, only if you know what you're doing. And that's where working with a broker such as myself, who specialises in this area, makes a massive difference. So are you ready to explore how bridging finance works? If so, book a call with me today. I create straight-talking videos for UK landlords covering buy-to-let, bridging loans, and smart property finance strategies. If you're serious about growing your property portfolio, YouTube's picked a video out for you here. Give that one a watch next. Thank you very much for watching, and I'll see you next week.